Good day. Fabian Onetti for Winston Capital, and we're going to cover the week of July 8th through July 12th. Not a lot happened other than market records, but it's a week that is building a lot of expectations on the earnings reports. Remember we started the week with a very strong labor report the past Friday, and we're in the midst of this very big debate about growth between no growth. The risk of recession in 2020 versus just a slowdown like we had at the end of 2018, and the economy will come back. And we're getting one data after the next one. On one side, we have soft data in consumer confidence, especially in the manufacturing sector around the world, Germany, the US, etc. But we have, however, very good numbers on the service sector and on the investors' confidence and the consumer confidence. So we are, as the old saying goes, we're climbing a wall of worries very slowly, trying to determine where is the world economy. And that's what we will be somehow measuring. This week we have Chairman Powell speak on the lower and higher chambers in the United States. Basically, his comments were that the Fed is prepared to do whatever is necessary to be sure that the U.S. economy keeps up full employment and doing very well. Market takes this that we're going to have a cut in rates, a quarter point by the last week of July with this FOMC meeting, and then remember in August we will have no meeting. So it was a lot of attention to what Powell was saying, and it's a lot of data, like saying, for instance, 50% of the companies of the S&P have a dividend yield higher than the 10-year bond. That historic average is about 17%. So clearly, the market is trying to decipher where are we going. And on that note, we will have earnings for Q2, very important. They will start Monday, tomorrow, with Citibank, Tuesday, JP Morgan, Wells Fargo, Goldman, Wednesday, Morgan Stanley, and then the following week we will start having the other big companies. So very important on that sense, the earnings. I mean, remember, the Q2 in the United States is also stronger than the others, and still economists don't know why, even after eliminate the seasonal effects. But so it's very important to see how it goes. Many economists have cut numbers, and we're in the low twos for Q2. Remember, we have a 3.1% for Q1. So we'll see what it goes there. And we had good inflation data, especially a little bit of a pickup on structural issues, which is very important because that shows that the economy is showing some health on the pricing power. Remember, if you look at the rest of the world, especially Japan, Europe, the big fear is deflation. The growth is very little and deflation creeps everywhere. And the little spikes in inflation are just always seasonality issues or things that are not of a structural nature. So the economists are worried that we're going to go back to lower numbers. In the meantime, the market is doing records, thinking that we have the wind in our favor with the Fed cutting rates, and then we will decide what happens with economic growth. If you go back to what happened last year in October, November, the market, remember, at 325 on the 10-year, got very scared about the Fed being tightening and decelerating the economy. We'll have serious volatility and turbulence, and then everything somehow got corrected when the Fed kind of changed the tune and the news on the economy are good. Where we are now, the news of the Fed are good. We'll see what happens in the economy. For instance, people like Franklin Templeton, the big fund house, thinks that we're living a similar situation in October, November. Eventually, the 10-year that today is barely at 2% moves to 3% because of solid growth. And here we go. Morgan Stanley, on the other hand, thinks that a quarter point that the Fed will do is too little, too late. That the recession in 2020 is almost unavoidable, and the market is due for a correction, which could be significant. We don't know. We like it. Two opinions make a market. We still like what we own. We're long. and we will follow it very, very closely. In our markets, or in the markets that we like a lot in Latin America, big votes on Brazil on the pension reform. Lower house approve it, goes to the upper house. We're very close to buy Brazil. We met with some investors from there, some friends, and they're very bullish for the first time in a long time. They're very, very bullish on what President Bolsonaro is doing. If we get the pension reform passed, the next one will be a significant change in the tax laws, which, as we know in Brazil, are very, very high, especially for business. So that will be very positive. We had Hurricane Barry that landed yesterday in the Louisiana. So we'll see what happens if they have an impact on the oil markets, especially because of disruption. That could be just temporary, but it's always important to take a look at that. And as I say, this week we have a lot of earnings starting with the banks. We'll follow closely and we'll see what happens. Have a great week.